Thanks for joining us at XM.com. This is today's market comment by Haralambos Pisuros. I'm Christina Marujas. The dollar traded higher against all but one of the other major currencies on Tuesday, with the only currency holding its ground being the Japanese yen. That said, the dollar's recovery seems to be running out of steam today, with the Aussie and the Kiwi taking most advantage of it. Yesterday, markets seemed to be out of sync, with the dollar staging a recovery, Wall Street closing mixed, but Treasury yields extending their slide, and Fed Fund futures continuing to suggest around the 70% probability for the Fed to deliver its first quarter-point cut in March and a total of 125 basis points worth of reductions by the end of 2024. Treasury yields may have continued the retreat as U.S. job openings for October fell to their lowest in more than 2.5 years, another sign of a softening labor market and another validation to investors' belief that the Fed will cut interest rates sharply next year. There was a negative reaction in the dollar at the time of the release, but the currency was quick to resume its prevailing recovery. Perhaps traders preferred to continue covering their short positions ahead of Friday's official employment data. The euro has been the main underperformer during the dollar's latest recovery, with investors ramping up their European Central Bank rate cut bets following the larger-than-expected slowdown in Eurozone inflation. Yesterday, ECB member Isabel Schnabel, who is considered a hawk, said that given the remarkable fall in inflation, the ECB could refrain from raising rates further, adding that they should not guide for rates to remain steady through mid-2024. Her comments encouraged participants to bring forward their rate cut bets, with a quarter-point reduction now nearly fully priced in for March. Expectations that the ECB will cut interest rates sooner than the Fed may leave the euro vulnerable, even if the dollar resumes its slide against the other major currencies soon. Gold also defied the further slide in Treasury yields and continued pulling back yesterday, seemingly driven more by the recovery in the U.S. dollar. That said, after testing the key zone of $2,010, the metal rebounded, extending its recovery today. With investors expecting massive rate cuts next year, unemployment report validating their view on Friday could allow gold bulls to add to their positions as the opportunity cost for holding the precious metal continues to decrease. Thank you for watching today's market comment here at XM.com.